Hey everybody, good morning. How's it going? Welcome to another episode of Stocks for Breakfast. It is Wednesday morning, October 6th, 2021. And after a glorious day of trading yesterday, especially on the day trading side of things, the market woke up angry again today. We're going to talk about why. We're going to talk about how to handle it. And we're going to talk about some stock ideas, right? Everybody came here today. We're going to discuss some ideas of which stocks we're looking to buy today. One big question that we get quite often is when you have your list of stocks coming into the day and then the market completely changes overnight, how does that affect what you're looking at? And we're going to get into that in just 1 second as well. So stick around, I'll be back. Okay, so as with every day, everything that we do here is for educational purposes. It's up to you to make that final decision, but it's up to me. My mission is to help you make better decisions. If you find these videos helpful, definitely click down and smash that like button. That'll help me know that you like the content, as well as hit that subscribe button if you haven't done so. So we got a lot to talk about today. We're going to talk about the rotation. We're going to talk about the market being up 300 points, down 300 points, up 300 points, and then down 300 points again. And how do you mentally handle that? If you guys could just start typing into the chat, how are you mentally handling the back and forth right now? Are you a day trader? Are you a swing trader? Are you a longer term investor? And how is that affecting which stocks you buy, when you buy them, how you handle the back and forth? We're gonna do a little bit of a deep dive into the sector rotation. We're going to take a little bit of a different look today. We break it down and actually start to take a look at where the opportunities are and how we're going after those opportunities. I think the trade of the day yesterday by a mile, which was in our game plan yesterday, was net. If you didn't happen to trade net yesterday, we can take a quick look at that right now. It actually had a really good combination of things happen. So what ended up happening here in net was we had this pretty hard pullback after it made new highs and bearish gap into this pattern right here. And if you really wanted to zoom in here, we went from inside candlestick to monster bullish U-turn into well bid into another bullish gap. So one of the things that we really need to pay attention to, and we're going to do that with today as well, is which stocks are actually showing relative strength in the market and which ones are showing relative weakness in different time frames. Because and just to give you an idea of what this stock did yesterday, I'll give Simon. I don't know if Simon's on the call right now. I think he is. Simon in our community was all over this stock yesterday. It was a part of our pre-market game plan, and just unfolded beautifully. We actually also talked about trading Mara yesterday off of the rally in Bitcoin, which is actually slowing down a little bit here as well. Hey, how's it going? There he is. Simon, great job sticking with this stock yesterday in the boot camp. Let's see. Just day trading until more clarity. I think a lot of people are doing that right now. Let's see. Buying at the 100 SMA. Okay, that sounds good. That works. John, lower share size, higher bar for entry. You know what? That's actually a pretty smart statement. I have to be honest with you. That's I think a lot of people are now starting to realize the market just doesn't go up every day, and you really need to be on top of your position size. One of the most interesting things that we're having massive conversations about right now is the long-term thought process of how to make your account grow with consistency. Let's see. John A., good morning. Thanks so much for being here every day. I really appreciate it. Where's Catherine? I know I saw Catherine in there. There she is. Good morning, Catherine. So the biggest thing we want to talk about is something that I'm really happy about, both here in our community on social media, as well as especially people in the boot camp who have up-leveled what they're doing, and we are starting to trade with each other on a more obviously everyday basis. And let's really think about long-term. I get it. We're all excited. You know, I see all the books. Everybody loves trading. We get all excited about it. But what's one of the most proud moments for me personally is how you are really starting to understand that we should be trading when there's something to do, not simply because the market opened up and we want to go find something. And when you learn to script out what you expect to have happen, trading, it completely takes on a different perspective. Because let's say now with the market, and we'll actually take a look at how the futures are trading right now, and I think everybody can see that. The futures are actually down pretty big. They're down 50 points as of this moment. which is quite a shock after the way that the market opened and closed yesterday. We had a little bit of a sell-off in the afternoon, and I guess shock is relative. It's probably not so much shock as much as what we were looking to see. So if you're adapting our philosophy, which is if this happens, then I'm doing this. If this happens, then I'm doing this. And that includes position sizing. So if you're new to what we teach, it's really, you want to be in control of everything that you do, which means that you say, I expect this to happen. If it doesn't, I'm okay with being in cash. If it does, I get in there confidently. And the reason I bring that up is that yesterday's price action was just amazing. And again, I just showed you net, and there was a few other stocks that, like I said, Mara wasn't part of our game plan yesterday. When the market unfolds in a way that you anticipate, it kind of validates, we all know that to keep losses small and all that kind of stuff, but it really validates risk management is the first and most critical part of trading. Although it's not the sexiest part, it's like learning how to use the brake on your car. You're like, yeah, who cares about using the brake? I want to drive. I want to get going. But it's the brake that keeps you safe. And the concept of buying stocks is the exciting part of it, but it's the concept of managing the downside that keeps you going and going and going. And yesterday was a really big validation for a lot of traders that if you manage the downside and the market unfolds in a way that you script it, again, there's your trading plan, and then you go and find ideas that match your trading plan. When that happens and you script out what you expect to have happen and you confidently take those trades and you make more than you did on when you were getting your head beat up a little bit, it really makes you feel good that you're learning. It really makes you feel that you're in control of the ideas. And then we take that a step further, which is being in control of the share size. So actually, Minvi and a lot of other people are talking about this right now. And I think it's a good thing. Hey, Bob Curtis, good morning, pal. Nice to see you here. So position sizing, and it doesn't matter if you're day trading or swing trading. We've been very adamant about this, even on the swing trades that we've been taking, that right now in the current market conditions, it's imperative that you're on top of your position sizing and you force the market to give you some feedback, because we're not in that rip-roaring market to the upside. And again, the conversations that we're having right now with the market dropping more than 350 points as of this morning in the Dow, this is really the big topic of conversation. The bond yields are what everybody should be focusing on right now. The interest rates, right? We're talking about here, and this is really the big thing, is the Treasury notes. This is really what everybody needs to be focusing on. And I'll actually pop this article into the chat here, and everybody can take a look at that on their own. So let's see, Catherine. Took a few really small positions, see if you could build longer-term positions. You know what, Catherine? In this market or any market, that is actually a very smart way of trading. Now, the difference between the market we're in right now and the market that we were in probably, let's even say 3 months ago, is the size of your initial position now should be a little bit lower, because we're not raging to the upside. We're not seeing higher highs, higher lows from day to day, week to week, and closing on the highs. We're actually seeing the opposite of that right now. So there's still plenty of good ideas. And I'll walk you through one that we took earlier in the week, and I'll show you what the position was. I'll also show you a position that we had as a swing trade that didn't work out, that we actually kind of liked. It pulled back to a position, and actually it's one of the stocks that somebody typed in this morning. But here's the thing. As long as you are managing your position, our entire job, and this is something I used to do on my trading floor in New York City, we used to teach everybody to get a head start on a trade. Get a head start on a trade. So you're putting on a trade, you're getting feedback, and you're basically paying for feedback in the form of buying power and the form of your initial entry. So you're looking for feedback. You're looking for the move in your favor. You're looking to get a head start on a trade. And it's a subtle thing, but when you start thinking that way, you never stress anymore over the initial entry. And actually what Catherine typed in there was pretty smart, because you start to put pieces on and you get feedback from the market. But most people don't do that. Most people put as much share size on as possible. And some of the numbers that I hear from people where they're maxing out their position sizing on their first trade, there's places and times to do that. But right now, it's not the way to do that. And again, if you read all the classic books, Reminiscence of a Stock Operator, William O'Neill, Gerald Loeb, all of those popular books, Battle for Investment Survival, every single one of them talked about building into longer term positions, but taking small losses on the initial one and having no emotion. Now, again, no emotion, you don't want to sound like you're Spock. You're just running a business. It's a business expense, right? So the current market right now, as we just said, with the as Bob put in here, with the debt ceiling, with the bond buybacks going out the window, with interest rates changing, there's a lot going on behind the scenes right now. And that's not even including energy costs that are skyrocketing right now. So all of that being put into the equation, American Airlines got downgraded by Goldman Sachs today because of energy costs. So there's a lot going on behind the scenes. So what does that mean? What does that mean? Like, why are we on this call right now? Why are you on this call at 7:30 in the morning? It means that you want to make money over time. And in order to make money over time and more money over time, you need to protect your capital when it's a little bit less obvious. So now you have a choice. Be in cash until it clears up. Go hyper deep into individual industry groups that are obvious right now. We'll point out a couple of those today. Or hold much longer time, and you know that you're not day trading, you're not swing trading, but you're actually investing in those stocks. I think most of the people that are on this call right now are probably looking for more monthly cash flow, and that's kind of what we specialize in, whether it's day trading cash flow or monthly cash flow, or just seeing your account go from 10,000 to 14,000 at the end of the month, and then 14,000 to 20,000. You want to see that steady account growth, because I'm going to tell you right now, the most amazing feeling in the world is, no matter what kind of market conditions, is at the end of the month, your account went up because you know exactly what you're doing. The problem that a lot of traders have is they think every market condition is the same. So we're going to talk about that now. We're going to get into some trading ideas. If you did not hear about the story with Palantir yesterday, PLTR, got a big contract with the Army yesterday, and the stock actually this morning, as of yesterday, it was up about 10%. Right now, it's still up 8 and change. So you can see it's all the way up at 25. So it's trading all the way. It's trading all the way up at 25 right now, which is all the way up here. So the stock is actually having a monster move to the upside. So now the next question is, how do you trade this stock today? And obviously, with the market getting pounded today, the stock is showing great relative strength, good news, and good follow through this morning. So the fact that it's still holding the bid, it's up 8%, even with the market getting pounded. As we said yesterday, this would be one of those stocks that should be on your radar this morning. The stock that's on the opposite side of the list today is Facebook, which just continues to get hit by the articles in the Wall Street Journal, as well as the whistleblower now, which is taking that even further. A big thing about the market, and we get a lot of questions about small cap stocks, large cap stocks, niche specific stocks. The one thing that is incredibly important, and we'll get to this in a second, because I want to walk you through this. We'll talk about this in a second. And we did a big deep dive on this in our coaching call, in our bootcamp coaching call on Monday night, which is organizing your information flow, organizing how you decide which stocks you're looking at, how do you stay on top of news and that kind of stuff. In the current market environment right now, whatever stocks you're looking to buy in this particular, where we are right now, the best thing is getting a little bit of a tighter list. And when the market is obvious and that list is obvious, you should trade the heck out of it. But when they're not obvious, you have to be okay right now with being in cash, because this is not a market where the market is not lifting everything and compensating for all mistakes. So when we take it over and we start looking at this picture of the sector ETFs, you can see all across the board, there's very few that are breaking out. Now, the XLF, which is the what we're going to talk about today, definitely higher. Energy stocks, the XLE and the OIH, also higher. The miners and metals and mining on the verge of breaking out. And this is really where you actually need to, start making the list of stocks that are going to be kind of like your personal ATM. as the market gets tougher, you need to get tougher. As the market gets tougher, you need to really decide which stocks are going to be your universe. We had a conversation about should you be sector specific or industry group specific, and that does make sense provided that industry group is in play. However, you have to be very careful with that, because if it's not in play, then you actually are shutting your business down. So there's a balance between I want to see my account grow every month versus I'm going to only focus there. Now, there's nothing wrong with that, but you have to be mentally okay. So, for example, that if you trade something like the XLV, which is actually down in the corner there, and has been getting hammered with those stocks such as Moderna, Pfizer, NVAX, and we'll just rattle those off for a second. These stocks have been very hard to trade lately from the long side, and you've had to be somewhere else. So for as easy as they were to the upside, that's how challenging they've been to look for a spot to bid. We actually had somebody the other day asking me, why am I looking for stocks to bid? Well, it's because stocks, most of our community is looking for stocks to buy. Most of our community is not looking for stocks to short sell. It's kind of an advanced thing you could be using with puts if you want, and there's nothing wrong with that. But something that doesn't get discussed enough when you're talking about options is as the VIX is going up, the premiums on those options are going up, which makes it a little bit harder to actually make money because it's becoming more expensive with the price and time to expiration with that volatility to make money on the short side. So you really have to know what you're doing when you're initiating spreads and that kind of stuff. So we're going to dive into a few ideas. Let me know which stocks that you're looking at right now. John, definitely Netflix has been one of the ideas that we've been looking for. It has been one of the stronger stocks and actually broke through to new all-time highs yesterday. So I'm going to rattle off. We're going to go over some stocks that we've been looking at, stocks that have been trading, stocks that have some follow-through, and stocks that we're starting to look for new opportunities. And yeah, Catherine, we've actually been watching Mark now in the community for the last 3 days since the gap. It's been providing money overnight, but it hasn't been providing any short-term opportunity. And ironically, it's actually setting up as what we call a snapback trade today. So we're actually going to have Merck on our radar today as well. But let's actually get into DKS. Let me see. I just have to boot somebody out of here because this person's an idiot. You don't curse on when there's women in the room. So Roberto, we actually did take the trade in DKS yesterday. We actually had it as a swing trade, and we actually got filled. You can actually see the little bit longer term picture here. We pulled back, paused, and the market was strong yesterday. So putting together a couple of different pieces there, which is the market bouncing, a stock pulling back from all-time highs, pausing, stop going down, and giving us a spot to look for a spot to bid. We actually did get long yesterday and got out of the trade. It just didn't follow through. On a day where the market was actually taking off and that stock pulled back, the buying pressure and the recovery theme was all on the table yesterday and just didn't unfold. So that was actually one of the stocks that we did take a loss in yesterday. APPS actually had a pretty good day yesterday. Still above our entry price, looking for it to hit that 80 target before we look to either add or take initial profits. So those are two trades that we took this week. Working our way over into a couple of other ideas that we're looking at and stocks we're looking to buy today. We're looking at JP Morgan today and American Express. It's down with a lot of the rest of the market, but you can see here if we zoom out to a little bit of a bigger picture, you can see the levels that we're watching right now. So JP Morgan showing relative strength over the market over the last few weeks. And again, these stocks are going to start to do that as the interest rate conversation changes. I actually was reading this morning that because interest rates are even blipping up a little bit, the demand for refinancing has gotten crushed. So that's going to change things too. So JP Morgan is one of the stocks we're looking at right now, and American Express is another one that we're looking at right now. And you can see why. American Express now consolidating after a nice rally and resting right in front of a new breakout. So those are two financial stocks that we're going to be looking at today. Goldman Sachs hasn't really found a bid the way the other ones have, and Citigroup, another one that we're keeping an eye on. But at the top of my list now are those two. If you're looking for a little bit more in the financial sector, Capital One has been one that's been performing relatively well. So American Express, JP Morgan, and Capital One are going to be near the high of that list today. Let's see, Charles. I pulled the trigger on SQ and out before the day ended. Yeah, there's been a lot of that, Charles. Actually, we got a good question in our Facebook group. And by the way, if you're not in our Facebook group, scroll all the way down in the description below the video. Make sure you join our Facebook group. We can have these conversations in a little bit more detail. We had a good question yesterday in reference to handling getting stopped out and an idea then becoming valid. Let me actually pull that up, and I want to bring it into the conversation because it would be kind of cool for us to get into that. And thankfully, Facebook is up today. So I just want to bring this in so everybody can take a look. If you haven't done it, I'll actually just drop the link in here for you. It's our private group. Obviously, you can only get in by invite, but click that link to get in there. So this is really what I want to talk about. Obviously, a little bit of a joke here about how the market is struggling. But I want to bring this to you I actually want to bring this up here. How's everybody handling the current market? And the current market is actually the big part of the conversation. So Stephen actually posted something here that's pretty good. I don't know if Stephen Williams happens to be on the call here right now. Bob, I think I just want to answer Bob Curtis here. Bob, I think that you had sent an email to customer service that you thought we were emailing you too much. So if that's not correct, send another email to customer service and they'll take care of that for you. So I just want to zoom this in a little bit because this is a very common problem that a lot of people are having right now. So many that fail to move. So I get stopped out for a small gain that looks to fail, have to move the stop up. And many times where I get stopped out and then the stock actually does what it's supposed to do. Bob actually had the same thing here as well. So if we go over there, that's one of the problems that a lot of traders are having right now, which is getting stopped out, right? Then there's getting stopped out and the stock moving in your favor. So we actually had a couple of different answers here. And this one was by Sean and this one was by me. So this right here is actually a big deal. It's a really big deal. In the current market environment, okay, in the current market environment, but really in any market environment, is if you still like the idea. We want to talk about this because having an idea and getting stopped out versus having an idea and the idea is not valid anymore, two completely different things. So this is really an advanced thing that I want to teach you right now because it's something that a lot of people don't consider. And I think a lot of people right now are, especially newer traders, you get into a trade and when you put that trade on, you get out of it, you're like, oh man, I got to go find another stock, something that's trading better right now. And I understand that because I actually did that when I first started trading. But I want you to write this down because it's very important. And if you can't see it right there, there's two ways to handle when you get stopped out of a trade. The first one is first thing you need to evaluate is the idea still good? Did you just get stopped out on that idea? Maybe you got one of those big red candles that we joke around in the boot camp. We say it's an FU candle, and I won't say what FU means, but you buy the stock, moves in your favor. One giant red candle comes down, stops you out, and then if you're a day trader, half an hour later, things flying up to a new level, and you're cursing, right? Here's how to get around that. First, good job if you got stopped out and you take the loss, right? But the next thing you need to do, there's two ways to handle this. The first one is to set a alert at the price that would validate getting back into that trade. And it has to be a habit that you do immediately. As soon as you get out, is the trade still valid? Put the alert in there. Okay. Now, if I'll just use a number, if it gets up to $70, you want to have your alert at like $69.75. You want to be alerted before that. Or if the market is trading really well, it gets up to that price, and it was just one of those things where you got stopped out, actually put a buy stop up there. So if the stock is trading at 60, let's say it pulled back to 69.50 and you want to get back in at 70, put a buy stop up there for at least 100 shares or whatever's a smaller amount for you. It might be like your initial smaller piece, and get into that trade. So what ends up happening, and that's a very advanced strategy, what ends up happening is now it's in your position summary, and now you could be tape reading that stock because you'll know you were up $50, down $20, up $100, down $50. So once you put that buy stop in, now it kind of revalidates. You got feedback from the market. It was just that 1 5-minute candle or one daily candlestick, and you still like the idea, and now you're in the position again. So I just want to recap that again. If you're frustrated that you're getting stopped out and the stock keeps going, set an alert immediately after you get back in at the price you'd like to buy, or a more advanced thing, which is get that stock back into your position summary, put on 100 shares, but put a buy stop up at that level that you like. Okay. Let's see. Antonio, Visa. That's actually been in a pretty decent downtrend. Let's actually take a look at that chart. See if that's in play with some of the other ones. So Visa is a little bit different. It actually had a good rally for about a week over here, and it broke this downtrend. So really, actually, you know what? This is actually a good one to talk about, because now we need to talk about the break. So if you know and follow the way that we do things, this is the bearish order flow. This is the low prior to this trend line break. So now Visa is actually in a pretty big window. And this is where it's stuck right now. This is what we call kind of like that's the right price. So in order for Visa to be a trade for me right now, only one of two things is going to happen. It's going to revalidate the bearish order flow to the downside. And you can because this is still valid, you can trade this candle down to the support if you want a short-term swing to the short side, or you wait for this price to be broken, which will now confirm this downtrend in bearish order flow is no longer valid because you took out the level on the break. So right now, Visa is not really a trade for me on the long side. If anything, it would be a short sale down into this 216 area. Okay. Let's see. Thank you. I really appreciate it. We're still, I always take the feedback, and I really want to keep improving things. By the way, if you didn't do it, please smash that like button. It really lets me know what kind of content that you enjoy. Let's see, Joseph. As of Friday, long the VIX and UVXY calls, short DJX. Yesterday was tough sitting through drawdown. Plan to close them out. You know what's the most important thing about that, Joseph? You know exactly what you plan to do before you need to do it. So I'm going to give you a thumbs up on that. That's everybody can learn from that. Snapshot what he put in there. He's not waiting to see what happens. He knows exactly what he plans to do. That's scripting out your success. That's awesome. That's exactly what you want to see. Let's see. Oh, actually, that was one. Speaking about Tesla, we had a great quote by one of the members of our community yesterday. We were actually day trading Tesla yesterday, looking for it to bounce. You can see that it opened pretty strong here. This window here, when it pulled back yesterday, we actually started to get long. And you can see that it actually, after it started to bounce, it just hit a wall again. But that was at the same time the market was exploding and it started to break down again. This is a little bit more of an advanced thing, but it's stuff that you really need to pay attention to as a trader. If you make a good trade and the trade doesn't follow through, so many traders are like, oh, I made a bad trade. It doesn't mean it was a bad trade if it didn't follow through. I would take that trade in Tesla 100 times out of 100 times. Strong stock, good news, and the market's flying. And even yesterday, the Chinese electric vehicle stocks were actually catching a bid. So there was a lot pointing in the right direction in Tesla to get long yesterday. Got long, got stopped out, pulled back. And one of our community members, Fred Grove, I think it was probably one of the most right to the point quotes I've ever heard. He said, Tesla's trading like it's broken. And so the whole community took, we had a conversation about that. And if you stick to everything we talk about, it's like, if this happens, then I'm doing this. If this happens, then I'm doing this. Tesla pulled back. We didn't want to chase that fast move to the upside. Pulled back, held support, gave us an entry, broke out and pulled back. So if Tesla pulls back, we're going to buy it. If Tesla breaks out and pulls back again, and we don't have a profitable trade, then we're going to reevaluate. And because Tesla didn't follow through, we immediately shifted into other stocks that were showing relative strength yesterday and rallying with the market. So there was good stock, good idea, didn't follow through. In this case, because the stock wasn't following through, then we didn't set an alert. Because if the market's flying and you buy a stock and the stock goes down, that's a different if-then scenario. But Net was the one that did follow through yesterday. And hopefully you caught yesterday's video where we're talking about Net being in the game plan. So two different ideas, pretty much the same type of play. One followed through, one didn't. We took a small loss on one. The other one, we were having conversations about profits. So I think that one of the biggest things, and I just want to say thank you. I say it every day, but I want to thank you for being on the call here with us every morning because it really shows the kind of person that you are and what you're aspiring to be, which is you want to identify as somebody who can make money from the market. You want to make the market make you money, but I want you to know that I'm grateful. I'm really grateful because you have a lot of choices of where you could be right now, but you're here. So I want to keep giving you these actionable trading things, such as getting stopped out and setting alert, getting stopped out and setting a buy stop. But more importantly, what we just talked about, I think it's something that a lot of traders struggle with, which is having a good trade that doesn't work out and believing you made a bad trade. You need to shake off the concept of a trade that doesn't make money is a bad trade. That's not the case. A bad trade is when a stock is flying to the downside and you decide to bottom fish that stock. That's a bad trade. A lot of people do that because you feel like, oh, if this thing bounces, I'm going to end up having the ultimate price. Yeah, but you're fighting the easier trades, and there's no reason to do that. So there's bad trade versus I got stopped out on a trade. All these little mental things really add up to you having confidence. The whole goal of what I want to accomplish here, and obviously if you take the next step and join the boot camp, is I want you to expect to make money if there's money available. And that means you're making decisions of, I'm not going to bottom fish. I'm not going to try and pick a top. I'm going to go and find the easy money. I'm going to piggyback that easy money. I'm going to have confidence. Remember the 3 pillars that we talk about: stacking the order flow, reading the tape, and risk reversal. Once you have those 3 simple pieces in place, then it's just a question of scripting it out and looking for follow through. All right. I want to get through. I just want to let everybody know there's a bunch of ideas that I wanted to talk about today. So we're going to take a look at those ideas. So you have some ideas. We already talked about the financial stocks that we were looking at, but I want to kind of go off the screen right now, and I want to show you some other ideas, regardless of how the market's trading, of ideas that I am looking for them to pause and then take off again. Now, obviously, this is in the context of the market taking a hit today, and you can see the stock CRM is actually not down that much. So CRM now, whether you use classic chart patterns or not, one of the biggest things that we talk about is a push and then a pause. You hear me say a push and a pause, a push and a pause. I'm actually going to come on the screen over here. We push and pause. We push and pause. Now, CRM actually has had some good news recently, exploded, and now it's paused for 4 or 5 days, has not really declined or rallied with the market. But now we've consolidated into this really, really tight day where nobody did anything. It didn't rally. It didn't sell off, and it's not selling off hard this morning. CRM is going to be, again, if the market finds a bottom today, if CRM starts to trade above yesterday's high, we're going to start to look to initiate a new trade. So CRM is one of the ideas that we're looking for today. Another one is snow. Now, this one might be a little bit expensive for some people, but again, good relative strength yesterday, trading down with the market. So if snow catches a bid, if snow goes well bid, and again, if you're new to the community, well bid means higher highs, higher lows. So it's opening lower today, it can still go well bid. So if the stock opens lower today, if the stock closes strong, that means it's going to be well bid again. Then we're going to look for a run up to the 325 area. A couple of other stocks that have had relative strength yesterday that have paused. CF. CF is near the top of my list today. So again, if you could visualize what we're talking about, a push and a pause, a push and a pause, a push and a pause, and it consolidated yesterday. So if CF finds a bid today with the rest of the market, CF is going to be one of the trades. And here's a big part of this. Remember, I keep saying if then, because we get after the fact, everybody's like, oh, you said you wanted to buy CF and it went down. I didn't say I was buying CF today. I said, if CF catches a bid, then I'm going to start building a position. Like Catherine put a couple of posts in there before about getting feedback from the market, putting on your first initial piece. If CF catches a bid today, then I'm going to look for an entry to start a swing trade. And everybody needs to have those same things. You don't just buy it because it met the criteria and you close your eyes and say, oh, I don't care, the market's getting hammered today, I wanted to buy this stock today. You put that into if CF catches a bid, because CF has order flow, because CF paused, because CF has room to go. Those are the arguments that you put into the trade. So CF is going to be another one that we're going to take a look at today. So if you just tuned in now and you didn't catch the beginning, we're looking also at American Express. I just want to go over these stocks in case you missed the beginning of the call. American Express is going to be on our radar today, and JP Morgan. Those are the 2 financial stocks that we're looking at. And if you want to add, you can add Capital One into that list as well today. Okay. Let me see. I just want to get to a couple of people here. Thank you, Susan. Thank you so much. I really appreciate you being here. Let's see, John, thank you so much. Can you talk about the boot camp? Devin, we can talk about the boot camp. Yeah, absolutely. What I'll do is I'll actually post the link in here. The boot camp is essentially where you get everything from me. You get my course, you get multiple coaching calls per week, you get my entry, my exit, everything. Plus you get probably the most amazing community I think out there. If you want to learn more about the boot camp, you can click below in the video as well. It's just an amazing 30-day experience. It's not a subscription. It's just 30 days. And if you want, we can continue, but that's up to you. Let's see. Is that an old Tom Morris picture? Yeah, we have an old picture of Scotland Yard, not Scotland Yard. What's that old golf course in Ireland? I'm drawing a blank. I can't remember the name of it, but then there's an old picture of the New York Stock Exchange back there too. Anyway, all right. So again, financial stocks, and I want to go over a couple because I want to give back some more ideas for you to take a look at today. We mentioned Mara and Hilton this week. So Marriott, again, you can clearly visualize push and a pause, a push and a pause, a push and a pause, and pausing again. It's opening a little bit lower with the rest. St. Andrews, that's what it was. Oh, man, I just drew a complete blank. Thank you, John. You're 100% right. So, again, looking for stocks that have bullish order flow in the short period of time, pausing at resistance, has room to go. So, Marriott, again, it's a recovery play. We'll see. HLT as well. Hilton, you can see cleared some levels, opening lower with the rest of the market. So, here's the big thing that I want to get across. And this is a really, really important. Actually, you know what? We want to talk about Bitcoin for a second here as well. Bitcoin actually had a really amazing 4-day run, pausing right here, kissed 52,000 yesterday. And if that bid remains strong, we're going to stay here and watch Mara. So the last thing I want to end up with today is we just built, if this happens, then I'm doing this. If this happens, we also talked about trading mindset. If you get stopped out, how and when to get back in. We also talked about position sizing. So the market's getting hit this morning. We're seeing a lot of selling coming into the market early today. So having an up day, a down day, an up day, a down day. So today you need to be on top of your game and be smart. Remember, our goal is to see account growth consistently month after month after month. And the way to have that is to pull back your position size if it's less than perfect. But here's the thing I want to bring up. I'm sorry for pointing. First, if you could do me a favor, hit that like button. Somebody asked before, I just mentioned briefly, and we're talking about the foundations of order flow, right? And how do you know when it's okay to go in with a little bit more initial position size? How do you know when you can have a little bit more conviction in your ideas? And really, we're actually going to use this chart as an example because it's a pretty good one. Okay, there's a difference between buying when the last 2 days look like this, even though it's still in a bullish order flow here, right? So you can definitely justify buying here because you have almost 2 months of bullish order flow, right? Again, push and a pause, push and a pause, push and a pause, push and a pause, a push, and then this pause. So if you look at that moment right there, you're like, okay, that's still a pause to be bidding into. However, what I want to point out here is buying into this, where it's well bid, which is higher highs and higher lows, and still strong, versus buying into this, that's well offered, which is lower lows and lower highs. They're both buying opportunities. I just want to express that strongly enough. Both of those are buying opportunities. The question that we get a lot is, why are we buying the stock that's going down right now? We're not buying it because of what's going on right now. Right now, we're reading the tape to determine position sizing, okay? But what we're buying is the previous order flow. And I want to leave you with that today because that's something to write down. We're buying the order flow. We're timing with the most recent candlesticks. And that's all a part of tape reading. And that timing comes in with how much share size do you get on your initial entry because of that timing factor. So if a stock is bullish and you're buying into well-bid candlesticks, you can have a little bit more conviction on your initial entry. If the stock is bullish but pulled back for a couple of days, that's where you work the position a little bit more. And maybe if you normally buy 1,000 shares on your initial entry, maybe you'll go down to 300 and then get a little bit of feedback from the market. These little things make such a big difference over your day, your week, and your month, and your year because you're putting yourself out into the market based on the expectation for follow through. And what that means is we're okay with accepting risk, right? We're putting on a trade. We're like, okay, I'm okay with the downside. But what we're talking about now, and somebody asked about the boot camp before, that's a lot of what we do, is learning how to build that argument to say the odds of my profit target being hit right now are greater than my stop loss. And as you build that argument up or down, that should dictate your position sizing, okay? Let's see. What do we think about? We're going to actually end up with Juana. Good morning, Juana. Thanks so much for being here. NVIDIA has actually been pulling back with the rest of the tech stocks. So let's actually zoom out a little bit here and look at the bigger picture. So this longer-term move to the upside is still pretty good, but actually as of right now, let's actually do this because this is kind of cool, right? In a bearish way, but a push and a pause, a push and a pause. And right now it's in a bearish environment. If you're going to look at NVIDIA today, the minimum criteria I'd want to see, again, I'd want to see NVIDIA well bid. I want to see this candlestick, which yesterday went well bid. So that's the first start. I'd want to see this trade above this 207.50 level before I got back in. The market's down today. It's well bid. Minimum criteria would need to hold yesterday's low, which it looks like it's going to as of right now. So if it stays above 198, that means that we have a higher low. And if we could punch through yesterday, then the stock went well bid. So as of right now in this condition, because it's not perfect, because of the recent selling order flow, remember, selling order flow, but well bid on the daily, we have a little bit of a conflict there. That would lower my initial position size, and that's how I'd be looking at NVIDIA right now. All right. I have to take off, everybody. I have to get ready for our boot camp game plan meeting, which we have every morning. So I just want to thank you for being here with me today. I really appreciate it. We covered a lot of stuff. You might want to watch this one more than once because we covered positions, we covered getting back in, we covered a bunch of order flow stuff, and we went over those financial stocks. So if you could do me a favor, please click down, hit that like button. It would mean the world to me, actually. It would let me know that I'm providing you value. And if you haven't done so already, hit that subscribe button. All right. Have an awesome day, everybody. I really appreciate it. Take care now.